Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson and I'm an education coach and senior manager here at Charles Schwab. And there are the morning bells. And I'm joined in the chat by my good friend Barb Armstrong this morning, 20 plus year veteran of the financial market. She's a great resource to be able to help answer questions for all of you that are joining us, whether you're in the live version or whether you're here in the recorded version as well. And we're going to take a look at a little bit about what's going on here in the market this morning on this holiday shortened week. It's been a long weekend and some economic data coming up this week. A lot of economic data last week, and we'll see how that plays itself out in the overall futures market. And as we get into this discussion, we'll take a look at some specific areas of focus as well. So let's do this. Let's jump into a couple of quick housekeeping items as we normally do, just to make sure that we've got all of our bases covered. Remember that everything we talk about simply for illustrative and educational purposes only. It's not a recommendation or any kind of an endorsement of any particular security or strategy or instrument or account type or anything else. It's important to remember that futures and futures options trading involves substantial risk. They're highly leveraged. Make sure that you understand that they are not suitable for all investors. If you're going to consider trading any futures products, please read the risk disclosure statement for futures and options so that you understand those characteristics and risks. Remember that futures accounts are not protected by the SIPC. They require separate trading authorization, and you need to have an understanding of what you're doing before you jump into the futures world. Now, that's hopefully one of the things that we're going to do today in this discussion. Now, remember that as we talk about these ideas, we're going to be using the thinkorswim desktop software platform, specifically the paper money version. It is not a guarantee of future success out there in the real world, and it doesn't do some certain things that a live trading account will do. So make sure that you're aware of some of those differences along the way. We're going to be using technical analysis primarily in this discussion today. Remember that Schwab doesn't recommend the use of technical analysis as a sole means of investment research. Any means of researching market movement is simply theoretical in nature and is not a guarantee of what will or won't happen. And as we talk about the types of orders that we put on, or maybe examples that we look at today, remember that futures stop orders work a little bit differently than the way that stop orders work in an equities market. Oftentimes, what may happen due to exchange rules based on certain conditions at the time of activation, the exchange will substitute an exchange designated limit order for the originally triggered market order. So when we put in a stop market or a stop limit, there are going to be some differences in the way that that order is handled. And we'll talk a little bit about those as we get into this discussion today. But we're going to spend a little bit of time talking about how the futures market is moving this morning. We'll talk about perhaps not this morning futures options, but we will look at some illustrative examples. So as I do this, I'm going to switch my view over to the thinkorswim desktop software platform. And as we do this, this is a good opportunity for me to remind you to click on that subscribe button down at the bottom of the page. That is going to be a great way to stay connected to the Trader Talks webcast channel and to the community around that. And it's at no cost to you. And once again, thanks for keeping Barb busy this morning with that great chat going on. Let's take a look at the ES this morning, the /ES, which is the S&P 500 futures market. In general, we can generally see, again, that continuing uptrend, although it certainly does seem as if that 50-period simple moving average has rolled over just a little bit in the ES futures market. Nevertheless, the RSI is kind of broken out of that sideways range that it had been in. And the last time we talked, last Tuesday, the ES was kind of cruising underneath that diagonal trend line, a little bit of a symmetrical triangle squeeze, as is often want to do when levels of support and resistance come close to one another, when they converge upon one another, we get a little bit of a pop. And in fact, we did last week. We saw that pop to the upside and then a little bit of a continuation of that move. Nevertheless, it certainly seems as if there is a bit of a resistance level that exists here on the ES, maybe up around this 61, 66 level or so, certainly up into that range, up into and including the 6,200. The market likes big round numbers as levels of support and resistance because people like big round numbers as support and resistance levels. And so if we zoom in here a little more closely, you can kind of see what's going on. We get these small range movement days. Now, part of that is simply the fact that the equities market was closed yesterday. It was a holiday weekend, lots of traders perhaps going on kind of the last of the big holiday vacations around the first of the year. And we won't see much of a holiday until we get into things like Juneteenth and then Memorial Day. And so we're kind of going through that drought of holidays a little bit as far as the market is concerned. So people getting in that last little bit of vacation, certainly coming skiing and doing all those types of things. A lot of people in southern Utah, which is where I am right now, and starting to see this little bit of a move to the upside, but running perhaps into a little bit of a resistance level here on the ES. Let's take a look at the NASDAQ, which is seeing a little bit more strength. And again, a little bit more of a move higher on the RSI, breaking up to a new high, which we didn't have on the SPX. And perhaps a bit more range for the NASDAQ to move, these NASDAQ futures up to this 22,460, up into that 22,500 range, kind of as a resistance level. And if we were to draw that line in here, we got to see that maybe right around there. Again, remember, levels of support and resistance oftentimes are ranges and not exact bright lines on the chart. And we could perhaps argue that that would be a bit of a kind of basing pattern or rounding pattern here, maybe a little bit of an inverted head and shoulders, maybe we get a bit of a cup and handle as it approaches that resistance level. We don't know yet because it's not there yet, but certainly some strong momentum to the upside, despite the fact that today's candle so far, just a little bit of a test higher, maybe some price discovery going on up above previous highs. So now in a kind of one of these things is not like the other relative to the SPX, starting to turn a little bit red, but starting to also see a higher high relative to previous highs, especially those end of January highs that we saw on the NASDAQ and the S&P 500. The one different index here, the one different futures market is the Russell 2000. We've talked about the Russell 2000 on occasion. In fact, we traded the Russell 2000 as an example trade over the course of the last week, and kind of still seeing that sideways movement underneath this resistance around the 2,300 mark or so. The 50-period moving average kind of declining in this particular case and rolling over to the downside just a little bit. So again, a little bit of a squeeze, continuation of kind of this downward squeeze. And a lot of that has to do with rates. So I'm going to do this again really quickly. I'm going to take our Flask icon up here at the top. I'm going to come in and type in comparison, C-O-M-P. We'll start with that word comparison. And I'm going to go to the gear icon and we'll throw in the symbol /10Y, which is the 10-year yield futures market. Not looking at this specifically as a trading vehicle at this point. This is simply a comparison tool. And so we're going to click on apply and OK. And we're going to see what's going on here with rates. And normally there's kind of this inverse correlation, which we've looked at before. And in recent months, really over the course of the last couple of months, we've seen kind of this almost exact reverse or inverse correlation. When yields are down, the Russell's moving higher. When yields are up, the Russell's moving lower. Now we've kind of seen these little blips, and we're still seeing it, but they're coming closer together, right? The confluence between the yield and the Russell, and really not seeing much movement here, would suggest maybe that this market is simply in kind of that, again, that wait and see mode. We've talked a little bit about that wait and see mode, kind of that perspective of saying, wow, there's not a lot of certainty here. I mean, you know, when we had the yield trending higher, we saw that the Russell was able to digest that and also trend higher. But on a short term, kind of still seeing some of that, maybe the correlation diminishing a little bit here in this range. As a matter of fact, if we were to do this, this is a tool that traders could use to kind of look at that comparison. So what I'm going to do is I'm going to come over here once again to the Flask icon, and I'm going to type in correlation, and I'm going to put this down here in the bottom. So we're going to correlate the 10-year yield to the Russell 2000 futures. And again, I'm going to go to the gear icon. I'm going to change the symbol to /10Y. And we're going to put that in there as our comparison symbol. This will come in down on the bottom, and we can see where that correlation is. It had been almost 1%, or, that -1 inverse correlation. It is now coming back up a little bit. So again, we're starting to see this digest some of that movement. And if we get back to that 0, then it really kind of suggests, again, if you see where that 0 line is, that the two are moving roughly in conjunction with one another. When we get that positive correlation, that would suggest that the Russell moving up with yields moving up, the Russell moving down with yields moving down. And that's not the typical state of things. You see that we very rarely approach that +1 correlation. So we're still down closer to that -1 inverse correlation here with the 10-year yield. And, you could probably make the argument that maybe there's a little bit stronger correlation to maybe the 2-year, in terms of its direct impact. And we can do that. Let's kind of play that out here. We'll come back over here and change our comparison line to /2YY, which is the 2-year yield, the short end or the front end of the curve generally. And we'll click on apply. And let's change our correlation to the 10 or the 2YY /2YY as well. Oops, not that one, /2YY, enter, and we'll click on OK and apply and OK. And you can see that maybe not as much correlation here, although it is, it's down about the -84, so a little bit of inverse, but this tends to maybe stay a little bit higher here. Some gaps in this 2 years. We see contract changes and so forth, but maybe not as much impact on the Russell 2000. I thought it was kind of a good exploration there to maybe see which of these two is perhaps having a little bit more influence on the Russell 2000. We see the Russell kind of going sideways here, running just below that resistance level at the outside. So what I also want to do is I want to come back over here and let's go to our single grid, and let's take a look at some of the other areas of the market. And again, on this single grid playground, we've got our ADX, which is our directional movement line, really a trend strength gauge. We've got the RSI, which is the momentum indicator. We've got the price chart, right? So this is the mini S&P 500. We can see that trend is not really strong, which is evident from price movement. But let's take a look at a couple of the other areas of the market that are going to be likely in play over the course of these next couple of weeks. /CL is one that we look at quite often. This is crude oil, and we've left our Fibonacci retracement lines on here from this move off of the support level down around the 67 mark to that $80 mark, which was that high mark in this recent movement over the course of the last 2 weeks. And we see that, last week when we were here, we were looking at the crude oil contract kind of bouncing up a little bit, maybe not making a bull flag. 2 weeks ago, we were looking at this maybe making a bull flag, and it didn't. Now we're kind of coalescing down around this 23.6% retracement in this particular case, and sitting right on that 70.2 line. And as we do that, that kind of gives rise to the potential for the bounce, and we can maybe see that bounce a little bit higher here. Now, that doesn't mean that it can't come back down into this particular range, as we kind of see those short-term support and resistance levels being squeezed here. Now, Vlad is asking about the futures label that I have up here that illustrates tick size, tick value, point value, and essentially notional value of the futures contract. So what I'm going to do is I'm going to go up here to the Flask icon. This was a scripted using the ThinkScript tool. By the way, Michael Fairborn teaches, and I think Barb taught on this last Friday, the ThinkScript webcast. And that's one of the places that you can go to find this information, find out how to do this. So here's what we're going to do. I'm going to click on share, and we're going to share, and then I'm going to put this out in the chat, and I will also put it in the description for the webcast. But remember that anytime we share anything, it is for illustrative and educational purposes only. They are not guaranteed. Any shared items not guaranteed as to time or accuracy. So your mileage may vary. Take that for what it is worth. And there's our futures label up there. You can change colors. You can change the characteristics of it if you want to ThinkScript that. But crude oil kind of coalescing, if you will, pooling down here around that 70.2 range. Let's go /GC. This is the gold contract. And gold has been gaining a little bit of trend strength, gaining a little bit of momentum. We've generally seen this longer term uptrend in the large gold contract here, and a little bit of a rally higher and a bit of a pullback. So this is actually where I'm going to focus in just a minute. I want to pay attention to what's going on here, not only in the short term, but also in this kind of intermediate to long term, because we had this breakout of this resistance level, maybe right around the 2760 mark, maybe even out that 2797, 2800 level, and a rally up and a little bit of a pullback, which looks for all the world like a potential bull flag. Now, Barb teaches the breakouts and bounces webcast. I taught it for her this last week. We talked a little bit about flags. So we're going to see if this becomes a flag. But before we get to that, let's pop into /SI silver, which is, I know, something that traders have been paying attention to as silver has been moving back towards these new highs. And if I were to draw a line across here, I'm just going to kind of best fit, not too particular, not too precise, where there perhaps is a little bit of a level of resistance here in this particular case. I'm kind of looking at this kind of scooped or scalloped double bottom. You could probably even look at it as a double cup and handle with that potential for a breakout here. RSI turning up, the ADX also turning up a little bit. So we've got a little bit of a growth in trend strength, a little bit of a growth in momentum here as well, and looking potentially for a pop to the upside. Now, that pop to the upside, not guaranteed by any means, but certainly would potentially, if we're banging its head into the resistance here, and all along here, a potential breakout certainly could possibly, but again, not guaranteed by any means, but from a technical analysis perspective, suggesting a move maybe back out to that previous high up around the 36 mark. Or some traders may even look at this from the perspective of saying, hey, if we get a move from the bottom of that basing pattern up to the top of that basing pattern, that maybe puts us up here around the 37-38 range, kind of doubling that, right? All right. So let's kind of take a look at maybe some of the other metals markets. And then, Carol, I'll come back and we'll take a look at the VIX as well. But I wanted to kind of get through into some of these discussions really quickly here. Let's come back over here. Let's take a look at /HG. This is copper futures. And again, you can kind of see that basing pattern building and then a little bit of a pullback, maybe a longer cup and handle type pattern with that little bit of a pullback in copper this morning. If we take a look at the distilled products of crude, which we should have done when we were looking at crude, but let's take a look at /RB really quick. This is gasoline, and gasoline relatively flat. Again, going into, we've got a little bit of a break here before really driving season kicks in. We've got some indications that perhaps demand is coming off a little bit in terms of gasoline. Let's take a look at /HO. and HO relatively stable here. Remember, HO, heating oil, is not only the proxy for actually heating oil, right, used in industrial purposes, but also primarily, in one of its biggest uses, is as a proxy for jet fuel. And perhaps seeing a bit of an abatement in that demand for jet fuel, perhaps again as the holiday season abates a little bit, and prior to kind of that summer travel season when that demand typically tends to move higher. So heating oil kind of backing off just a little bit and flattening out. A couple of other areas really quickly that I wanted to go through. We talked a little bit about this last week. This is lean hog futures continuing to make that move to the upside, and /LE live cattle continuing to come back down, although you wouldn't know it. And again, there's typically a lag between cattle futures and prices in the stores, as there often is. But prices in the stores continuing to rise, prices on the futures market continuing to fall here a little bit in terms of cattle futures. So now we kind of have that sense. Now, Carol wanted to take a look here at the VIX futures. So we'll take a look at /VX, and we can kind of see that VIX futures, the volatility futures, still compressing to the downside, although the VIX itself, the VIX index, VIX, if we put VIX here, seeing a little bit of an upward move. Let's kind of zoom in here so we can kind of see what that is. A little bit of a lift in volatility, and that would suggest maybe a little bit of a bleeding into some protection on the part of institutions, perhaps buying protective products like SPX puts or SPX futures, and perhaps shorting those SPX futures as a means to provide some protection. That's kind of like using a really, really big hammer to fix something using an SPX future, the ES futures. That is a big protection instrument, generally, given the size. Now, we've looked at some of the smaller contracts. You can reduce the size of the hammer, but it is a pretty blunt instrument generally when providing protection. We've talked about that. I talked about that in my index options webcast on Wednesday mornings, which I'll teach tomorrow morning. But I saw an article over the weekend talking about the difference between protection. One of the reasons why the VIX has been staying relatively flat is that some of that protection perhaps has been coming in the context of buying gold futures, right? For instance, /GC, like we talked about. So if we did a comparison here, and we made this comparison /GC, clicking on OK and apply and OK, you can see that, gold, which has a kind of traditional perspective of being a safe haven, perhaps has seen a little bit stronger inflow than maybe protective products on the part of the VIX, right? So maybe there's been some rotation here into the VIX. Now that maybe we see that little bit of a pullback in gold, perhaps a bull flag, but maybe not. We see maybe a little bit of rotation back into SPX options and /ES futures contracts as a means to provide protection as opposed to gold. So we'll see if that becomes the case. All right. So there are a couple of areas that I wanted to focus on. We're going to shift our grid here to our futures movers grid. There's our crude oil contract. This is the micro crude oil contract. And so what we've got on the left-hand side is we have the 1-year daily chart, just compressed down a little bit. On the right-hand side, we have today's movement on a 15-minute bar perspective. And so the first 15 minutes created a high up here around the 7160. That kind of becomes maybe the mark to beat here in this upward movement. So looking at this as the possibility of a bull flag short term, some traders may use this previous high, that high of the first 30 minutes, as kind of the entry point into a bullish trade. And likewise, the low of the first 30 minutes as an entry point if going bearish, and simply taking it as kind of that binary perspective here. So we're a little ways away from that. We could set that trade up, but I wanted to look at that gold contract again. We're going to come back to /MGC, which is the micro gold contract. And I saw this strength coming in this morning as I was starting to do some research here on this 15-minute chart and starting to see some strong upward movement, maybe giving rise to the idea that if we zoom in here that we are seeing perhaps a little bit of a bull flag. So now that becomes a question of how do we draw that bull flag in here? And what do we look at in terms of a target? Because we've got some solid momentum moving to the upside here. So I'm going to grab my drawing tool. I'm going to grab my trend line tool, and I'm just going to use this horizontal right around that 2741 as the base of my flagpole. And we might even make that a little bit higher. Let's take 2750, kind of right there. And we'll draw that up to the high, and then this becomes the pullback, right? So then this becomes the pullback. And if that's the case, we were going to right-click and duplicate this move and put that on top. So that kind of defines our potential bull flag here, right? And that would be a possible move up to, say, for instance, the 3100. Carol, I like your question. What's causing the fear? What protection against what? Right? Protection usually comes in these markets against adverse overall movement. And that risk of adverse overall movement comes from a lot of different things. Economic data. It comes certainly from geopolitical risk, which I think there is a certain amount of at the moment. I think there's just kind of that general sense with the change of administration and kind of the new year that there's maybe a little bit of wondering, right, what is going on. And so I think that may be part of that perspective here, right? So, and again, if that's the case, then gold may be one of those beneficiaries or may continue to be one of those beneficiaries. But you notice what we're seeing here in the short term is a lot of strong upward movement on these 15-minute candles. So we might look at taking this trade on this move off the bounce. And now we don't have a close above the high of the low day yet, right? So we could argue that in order to get this entry signal, we've got to see a move back above this 2957 mark, kind of the high of that low day. If we were looking at, we're well off of that, at least at this particular point, right? So we could simply structure the trade that way, and in terms of kind of this longer term perspective. So we could really just kind of come in here and use the left hand side, kind of that longer term perspective, and we'll call it 29. We'll call it 2960. We'll right click, and I'm going to buy custom with OCO bracket. And I'll actually expand this chart. So we know that we've got some short-term momentum-driven movement here in this particular case. So I'm going to come back and we're going to just kind of shift this down a little bit. I'm going to say, all right, if this moves below 2892, which is kind of this support level, right, that it's established, if it moves below 2872, then we're going to exit if it's going against us. So we're going to use this as a stop order. But remember that stop orders behave differently in the futures market. They actually become an exchange worked limit order within a protection range. And so that order may get rejected if we get a fast moving market and the price moves through that range. So that may get rejected. The order may not fill. So it's something that you can't just set and forget. Anything in the futures market, anything in trading, I don't think you can set or forget. So we're going to say 27, what did we say? Let's see, 2872. That's what it was, 2872. To the downside is going to be our threshold for getting out of the trade. We're going to make that one good till canceled. We're going to get out if it goes up to that resistance up at 3100. That's going to be based on that flag pattern. So we're just going to simply put this in here, 3100, and enter. And we're going to make that good till canceled as well. And our entry on the daily chart is going to be a buy stop. And again, this is going to do the same thing because this becomes a market order. And so it's going to get worked as an exchange worked limit order, but we're going to say buy stop above that resistance at 29.60, right? 29.60 was our threshold to get into this trade. So we're not getting in right now, right? We're getting in based on evidence that price is moving above the high of that low day. And we're going to leave that one a day order to see if we get in. If it doesn't, then, if this moves away from this, then perhaps we reevaluate at that particular point. But I'm also going to come in, and before I do anything else, I'm going to drop this back down and I'm going to say, fine, let's put an alert here. Create an alert at or above that 3,100 mark. And that'll remind us, and then we'll put it at or below this 28.72 mark. So we'll create an alert here at or below 28.72, and that will give us a reminder if that order does get into that range. So again, remember, an OCO order only allows for that move up or down, and if one fills, the other should cancel. Now, the problem is, especially in a futures market, because there could be volatile movement, that if you have an OCO bracket order where the levels are too close to one another, like on an intraday basis, that there is the possibility that one order could get filled and then the market could turn and move to the downside very quickly before that second order has an opportunity to cancel. So that is a risk. And so be aware of that particular risk, right? Oh, yes. Thanks, Bob. Thank you for catching that. Good question. We would have caught that when we read the order, right? So we're going to make that a buy stop with a trigger at 29.60. We're going to click on confirm and send, and we're going to read through that. Buy stop, 29.60 is our trigger. Good catch there. And then sell if it goes up, sell if it goes down. And we've already put alerts in there, and we're going to put this in our futures group. And we're going to go ahead and we're going to hit send, and we're going to fire this order off. And we're going to come back over here to our monitor tab. There's our gold contract. We are short the Russell still, and that is with the exception of today kind of just sitting there neutral, and it hasn't hit our alert yet. And our /XC, our gold, or excuse me, our corn futures, mini corn futures, that's working in our favor. So we're going to leave that one alone at the moment as well. So here we are coming into this perspective. There's one other one that I wanted to look at. We'll go back over here to the chart, and we'll click on restore sells. And that was this one, /6C. And this is the Canadian dollar futures contract. And I wonder, /M6C, there is nope, we don't have, that's on the CBOT exchange. So /6C is our Canadian dollar futures. And I happen to notice kind of this same perspective setting itself up here, right? This inverted head and shoulders, or maybe this reversal pattern with this long move to the downside and a potential move back up towards this resistance level. A little bit of strong movement today. Again, not yet really breaking out of resistance, but just ticking higher on the MACD, ticking higher on the CCI. So what I'm looking for here in this particular case is an entry into this Canadian dollar futures contract, looking for upward movement, maybe back up to this next level of resistance up around the 0.72 mark, right? And looking for that move higher. So we're going to do the same thing. We're going to take this and right click, and we're going to buy custom with OCO bracket once again. And we're going to do this as a buy stop above 70.53 or 0.7053 is our entry. And we're going to make that a buy stop. And we're going to look at getting out of the trade when it gets up to 0.72 on the upside, because that's where that next level of resistance is, 0.72. 4.72, potentially resistance. And again, we're going to make that a good till canceled. That's going to be worked as a limit order because it is a limit order. And then we're going to look at exiting this if this breaks back down below this intraday support level around the 0.7045 mark or so. So let's come in, and this is going to be a pretty tight range here, but we're going to do this 0.7045 and enter, and we're going to make that one a stop and good till canceled, recognizing that this is going to be worked as an exchange worked limit order in this particular case. And we're going to go ahead and click on confirm and send and read through this order, looking for that upward movement. And the downside movement, we've got that range at which we're going to exit the trade, but recognizing that that's not an exact science. It's not going to guarantee that that's where we're going to get out of the trade. So we've got to be aware of that fact. We'll put that order out there. We'll click on confirm and send it out. But once again, we're going to put in an alert here, especially on the downside. I'm not so worried about the upside, but an alert below that at or below 70.45. We'll click on create so that we've got that alert in there. So that's going to let us know. All right. So, okay, notional value in this particular contract is 70,000, right? So this is the big contract. Again, so good question, Thaya, and I'm glad that you asked that question here. Yeah, so John, we may close this next week or roll it out and continue. John asked a question about their corn contract expiring or changing, the contract changing in 9 days in that particular case. So we're going to start to look at rolling that potentially before we get to that expiration. All right. So Siri asks a great question, which is that correlation. So what I'm going to do is I'm going to come back here to my futures grid. This is the one that we looked at before, right? So here's the futures grid /ES /NQ /RTY. And the other grid that I have here is our index grid. And this is SPX and NDX and Russell 2000. So this is essentially the movement of the cash market. So the indexes don't trade in the after hours time frame, right? Time period. Some of the options do. It looks like our CAD futures contract filled for us. So the indexes, with the exception of some of those index options, potentially get traded in those after hours timeframes. The components of the indexes will trade now, in some cases 24/5, but the futures contracts trade essentially 24/6. And so the futures contracts are going to stay pretty close generally to, and we'll just do this. We'll stay on the futures or the index. We'll come up here. We'll type in comparison. We'll do our comparison chart again, and we'll make this the /ES. Click on OK and apply and OK. And these are generally going to stay very close to one another. Otherwise, there is an arbitrage opportunity using index options versus the futures contract. And so those differences are oftentimes going to resolve themselves fairly quickly in terms of any kind of disparity between the two, right? So something to pay attention in the context of, are you going to use an index option? You're going to use a futures contract to accomplish whatever your purpose might be. So something to pay attention to in that context here is the difference between those two and the disparity between those two. And again, these are going to trade individually, right? Because the index is the index. It's the aggregate of the prices of the components. The futures has its own expectations and it trades differently. Just like, for instance, a fund, and I'm not talking any specific fund or anything else. I'm just talking about a fund might trade differently than its net asset value or the components of the fund. So if you're going to trade any kind of exchange traded funds, mutual funds, make sure that you understand the characteristics or risks the charges, expenses, characteristics, objectives of those products. Read the prospectus. But as we look at the comparison between the index and the future, I think this is an interesting comparison because sometimes you will see a large disparity. And again, it's the futures that's moving differently than the index because, again, the futures is going to trade separately, right? So Bob asks a great question here in terms of those trades. If your stop may not work as intended, how do you sleep at night? Well, number one, you pay attention. Number two, you have an alert. Number three, some traders may simply just not hold futures contracts overnight simply because of that potential risk. So that is another potential there as well. So, and Siri, to your second question, if you see one particular area, let's go back to our single grid, something like /HG, if you see one particular area showing strength, say for instance, copper, how is that going to relate to other sectors? Well, you have to do a little bit of, either direct intermarket relationship analysis or some intuitive intermarket relationship analysis, right? You think about copper futures. What industries do copper futures impact? Well, home builders for one, right? So you could look at, say for instance, a home builders index or the industrials index versus the copper futures to kind of get that perspective and see if there is a relationship there. So something that we can do. And by the way, I do a little bit of that in my webcast that I teach on Mondays. If we pop back over here to our Trader Talks webcast page, and you type in market movers, we do a little bit of intermarket analysis in that discussion on Friday afternoons as we kind of wrap up the week and then look forward to the next week. That's the Market Movers webcast. Great place to go there. Remember to click on subscribe and like. Remember to follow us on X. I'm at Ben Watson CS. Barb is at Barb Armstrong CS. We talked a little bit about what's going on in the futures market. We talked about some example ideas here, and we jumped into a couple of positions here, that long Canadian dollar trade and the long, or set up that potential trade in the long mini gold futures, looking for that upward movement. So as we take a look at what's going on, guys, have a great day. And this gives you a start for the rest of our webcast day, and a lot of great stuff, a lot of great content coming up. My thanks to Barb Armstrong for helping out. Click on that subscribe button, click on the like button as well, and we will see you again. I will see you again tomorrow for Index Options. Have a great day, everybody. We'll see you soon. Bye-bye.